Well, good morning, everyone. Jerry Walker here with FlockBase Software. Welcome to our 2020 tax update for ministers and churches. We appreciate you joining us here on this Saturday morning. We know that you're giving up your personal time, and we're going to respect that, honor that, and we appreciate that very much. We're just going to make a few announcements here while everybody gets connected. We've got 145 registrants, so we expect to have a pretty good showing today. I'll just mention a little bit about our company. Many of you already know FlockBase Software makes membership accounting software for churches. And so we've been doing that for a little over 12 years now. Last year, we introduced a cloud-based version. So we're very pleased with our cloud-based version. And just right here at the beginning, I want to go ahead and give you a special discount code. So if you'll write this down, it's half off 2020, half off 2020, HALF 2020. What that will do is if you are not a cloud-based customer yet and you'd like to move to the cloud, you can enter that when you place your order and you will get half off the purchase price of the cloud for the entire year of 2020. So we are pleased to make that offer to you. This is Jerry Walker. I'm the good-looking one there on the top. Kevin Cheshire is my business partner, and he will be one of the co-presenters today as well. Kevin has all that extra hair on top of his head, so you can always separate us by. I've got the cool haircut. He does not. I am one of the founders of FlockBase Software. I'm also a CPA with 28 years of public accounting experience, and I do a lot of church accounting and tax consulting. I've been preparing tax returns for ministers and providing accounting and tax advice to churches for quite some time now. Kevin, who you will meet later and will be co-presenting, he's also one of the partners here at FlockBase Software. He's also a CPA, 30 years of public accounting experience, 23 years of that was in church administration, and currently provides a lot of consulting to ministers and churches. I want to cover our schedule for today. We've got it broken down into 3 sessions. Session 1 will run from 9 o'clock to 9:50, and the topics that we'll cover are tax saving tips for ministers, maximizing the ministerial housing allowance, fine-tuning tax-free employee reimbursements, whether you should be paying a car allowance or a mileage reimbursement. That we'll finish session 1 with educational expenses. Then if you'll notice at the end of all 3 sessions, we're going to have a question and answer session. So you're going to have the opportunity to type in your questions into the Facebook Live, and then during that Q&A, we will answer as many of those questions as possible. Session 2, we're going to cover health benefits for employees, employee retirement plans, structuring ministerial compensation packages. Kevin will talk about opting out of Social Security. There's a new 2020 Form W-4. Some of you have already seen that because your employers have provided that to you. We'll talk about that. It's pretty complicated new form. We'll talk about Form 1099. And then we'll finish session 2 with a discussion about the common payroll reporting errors that we've seen over the years. So having done this, for over 20 years, we've seen probably every mistake made, and some of them we've seen multiple times. So we wanted to share those with you. In session 3, we will cover reporting cash and non-cash contributions, and we'll talk about whether you need to apply for your 501c3 tax status or not. We'll also talk about Form 990 and whether you need to file that or not. We'll talk about unrelated business taxable income. So I want to stop right there and just mention this. The first 2 sessions are pretty heavy on information for ministers, about how to save tax for ministers. And then by the time we get to session 3, some ministers may be saying, oh, well, this is all for the church treasurer. I can just check out. But I think that unrelated business taxable income is an interesting enough topic that really everyone should stick around for that. Then we'll talk about an interesting little topic, repealing of the parking tax. And then we'll finish up with fund accounting, audited financials, and online giving. And we anticipate to get you out just a few minutes early today. Session 3 is a little shorter than the other 2 sessions, so like I say, we hope to get you out a little bit early today. All right, a few housekeeping items here. First of all, who will benefit? If you're logged in this morning and you're wondering, am I going to get anything out of this? If you're a minister, I will personally virtually guarantee you're going to get something out of this. We've helped so many ministers over the years. I think it's highly likely we will be able to share information with you that you didn't know before, or you thought you knew, or there's just a ton of confusion about church and minister taxes, and we can clear a lot of that up this morning. Also, if you're a church treasurer or a financial secretary of your church, we think you'll find this very beneficial as well. So we think both groups will equally benefit. As I mentioned earlier, because this is on Facebook Live, certainly we invite you to post your questions. We encourage that and look forward to answering those questions. One thing that I do request, though, is that you try to save your questions until after we've covered the topic. So if your question is about a topic that we're talking about in session 2, please wait until we cover that topic in session 2, because we likely will answer your question already. And if we don't, then post it, and we're going to try to get to it. Okay, the next bullet point there says we will not be driving 5 over. So what I'm referring to there is that you're probably familiar with how many people believe that as long as you drive only 5 over the speed limit, the policeman will not pull you over and give you a speeding ticket. I'm pretty sure I've got some family members that ascribe to that philosophy, and it seems to have worked for them over the years. So I do get that. I do understand that, that sort of thing goes on, and pretty sure that goes on in taxes too. But that's not the way we're going to approach our information today. We're going to be explaining the law just as clearly, accurately as we can. And so we're not going to be taking the perspective of, well, this is what the law says, but this is what we think you can get away with. We're just not coming at it from that angle. And I'll even come at it from this angle to say, maybe you've been doing it this way for 20 years, but maybe that's not what the law says. So the law is the law, and just because somebody's been doing something this way for 20 years doesn't make it the law. Maybe just means you haven't been caught yet. So we're trying to cover all those topics and be very clear about that. Final bullet point on the housekeeping slide. We are available for tax consulting and tax preparation. I have a CPA firm. Kevin works in our CPA firm, so we are full practicing CPAs, and we do lots of minister tax returns. We help lots of churches, and we're glad to do that, and we're very pleased to be able to provide this seminar today totally free, and we're just as pleased as we can be to provide all of this information for free today. But if you have a question next week, 2 weeks, next month, and you need some help, I'm just sorry, but we cannot offer all of that for free as well. We have businesses, we have families, and we have kids in college and all those sorts of things. So, later on, if you need us, we'll be glad to help, but we've just got to charge you our normal CPA rates for that future tax preparation and consulting services. Okay, so let's dive right into the heart of the material. We're going to be talking first about tax saving tips for ministers. So first, we need to define what a minister is, because I'm afraid, and it's likely, that there are some churches who are treating some of their staff members as ministers, and maybe they should not be. So according to the Internal Revenue Code, again, this is Internal Revenue Code, this is not me, I didn't make these rules up. A minister must satisfy all 5 of these separate tests. Number 1, they must be licensed or ordained. So I know different denominations have different practices regarding licensure or ordination. The IRS doesn't get specific about your specific practices, but they just simply say test number 1 is they must be licensed or ordained. So if a minister doesn't meet that first test, you can stop. You just don't pass. There's no reason to keep going through the rest of the tests. For tax purposes, you're not a minister if you're step 1, licensed or ordained. Now, I know we're all ministers. We're all called to be ministers. We should be ministers. We are ministers. But for tax purposes, test number 1 is you must be licensed or ordained. Number 2, administer the sacraments of the church, baptisms, weddings, funerals, and communion. Your church may have additional sacraments. That's fine. And, this is not a list that you have to do all of those. And they're also not saying you have to do all of these every week. But it does say that you have to be capable of doing these things. And I think it would be good if you occasionally do these things to be considered a minister. If you've never done any of these things and you get audited and the IRS says, do you meet all 5 of the tests? You say yes. They say, do you administer the sacraments? You say, well, I've never done that. That may be entered into a difficult discussion with the IRS auditor. Bullet point number 3, be considered a religious leader by your church. So your church must consider you a religious leader. Now, for the pastor, senior pastor, I'm sure that's not a problem, but I know some larger churches, have administrative pastors and pastors of several different departments. Still, I think the church is considering them a religious leader, and I don't see that as a huge hurdle for most ministers. Number 4, conduct religious worship. Again, this doesn't have to be every day, every service, but at least sometimes, and capable of performing and conducting religious worship, and have management responsibilities in the church. So down at the bottom, the pastor will almost always be considered a minister for tax purposes. So pastor, senior pastor, super easy, not a problem. What about the music minister, youth minister, or children's minister? Well, I think this could go either way. So you just got to run through the tests. Are they licensed or ordained? Do they administer the sacraments from time to time? Are they considered a religious leader? Do they conduct religious worship and have management responsibilities? I think a children's minister could very well be a minister under the tax code as long as they meet all 5 tests. Okay, so if we are a minister, do we receive special tax treatment? And the answer is absolutely yes. They've got 5 bullet points here that make ministers' taxes different than anybody else's taxes. Now, I will stop and say, other than these 5 bullet points, ministers' taxes are pretty much like everybody else's. But these 5 bullet points are huge. So this is the 5 things that make ministers' taxes different from everybody else. Number 1, ministers are employees, but pay Social Security and Medicare tax as if they are self-employed. Now, that is a confusing and crazy sentence. I know, I get it. I've been wrestling with that for 25 years, and I've had a lot of pushback from ministers. Well, Jerry, I have to pay my own Social Security and Medicare tax like I'm self-employed, therefore I am self-employed. That makes total common logic sense. That's just not the way the tax code's written. So, and sometimes the tax code just doesn't make sense. So the tax code says if you're a minister of a local church, you are an employee of that church. Now, I'm not talking about traveling evangelists, revival ministers, or people on the circuit, music ministers that make the circuit and travel all around the world. Yeah, they are probably self-employed. But a minister of a local church is an employee, but has to pay their own Social Security and Medicare as if they're self-employed. And that's actually a bad thing. So as we talk about these things that make ministers special, some of them are bad, some of them are good. And this first one is really a bad thing because ministers are having to pay all of their own Social Security and Medicare tax. Number 2, obviously, Social Security and Medicare tax is not withheld from the minister's paycheck. That's weird. We get a paycheck because we're an employee, but we don't have any Social Security and Medicare withheld. That's correct. Very strange, very weird, but it's the truth and the way it has been since before I started practicing. Number 3, the church is not required to hold income tax from a minister's paycheck. So that is weird. The church just doesn't use the charts for withholding. The chart simply is not required to withhold income tax from the minister's paycheck. Now, the minister can choose to have income tax withheld, and we'll talk about that later. That's probably a good idea for the minister to choose to have income tax withheld. But automatically, the church is not required to withhold income tax from a minister's paycheck. So I would say all of these first 3 bullet points are probably pretty negative with respect to a minister and their taxes. When you get to the 4th bullet point, though, this is where the benefit comes in. Ministers are eligible for income tax-free housing allowance or able to live in the church-provided parsonage income tax-free. So that's a great benefit for ministers. Most of the rest of us in the world, we go to work, we get our paycheck, we bring our paycheck home, which has already had taxes withheld and paid on it. Then we pay our house payment. But that's not the way it is for ministers. Ministers get to make their house payment using money that has not had any income taxes charged on it. Now, they still have to pay Social Security tax on their housing allowance, but they do not have to pay income tax on their housing allowance. So that's huge benefit for ministers. And then finally, ministers have the limited opportunity to opt out of Social Security for their ministerial income. We have a whole slide on that later. So let's look at a little illustration again that's helping you identify how a minister's tax situation is different than a non-minister. So we've got this sample illustration here where we're going to pay $1,000 worth of wages. Column 2 there's got the minister employee, and column 3 has the non-minister employee. For the minister employee, we're not holding out income tax. For the non-minister employee, we are holding out income tax. Social Security and Medicare, we're not holding it out for the minister. We are holding it out for the non-minister. Notice Social Security is a 6.2% withholding tax and Medicare is a 1.45%, but none of those withholdings apply to the minister. So the minister's net paycheck is $1,000, whereas the non-minister's net paycheck is $803.50. Now, as we said earlier, the minister still owes tax, it's just not withheld. So the minister has to pay the tax rate on that $1,000. I've assumed a 12% tax rate. That's the lowest tax rate. But the minister could be in a different tax bracket depending on how much income from other sources and such. So I'm just illustrating here a 12% tax bracket. So the minister still owes $120 of income tax on their $1,000 worth of wages. And then here's the big deal. And that is that the minister now still owes $153 of Social Security and Medicare tax called the self-employment tax. And so that 15.3 is this. It's the 6.2 of Social Security, 1.45 of Social Security. Those are 7.65 combined. And then as a self-employed person, you have to double that because you're paying both sides of the equation. So 7.65 times 2 is your 15.3%. Oh my gosh, the minister is paying a ton into Social Security and Medicare, and that's the truth. Let's go down one more line. On the regular non-minister employee, the church is paying another $76.50 out of the church's pocket for Social Security and Medicare matching. But because the minister is considered self-employed for Social Security and Medicare, nobody's matching that, and the minister's paying all the Social Security and Medicare themselves. So as you can tell, it's the same amount of money going to Social Security and Medicare, because if you take $76.50 out of the church's pocket and $76.50 out of the employee's paycheck, you're still getting to your same $153. It's just a matter of, for the non-minister employee, the church is paying half, the employee's paying half. For the minister employee, the minister's paying it all. So again, this is a really bad deal. It's one of the bad parts of being treated as a minister for tax purposes. Let's go to the next slide. So we're now on slide number 9, paycheck withholding, housing. So here's where it does get more beneficial for the minister, and that is on the housing allowance. So now we're talking about the housing allowance check. So we're going to assume in our illustration that the minister is being paid $1,000 of housing allowance. Obviously, a non-minister cannot be paid a housing allowance, and so all of that column is NA. Again, we don't hold out any taxes from the minister's housing allowance check, so it's still a $1,000 net check. But notice this in red right here. The income tax still due on the housing allowance is 0 because a housing allowance is not subject to income tax. So there's the savings. That's the big deal. And so we're going to spend some time talking about how to maximize that housing allowance because it is totally income tax free. Now, the housing allowance is still subject to the same Social Security and Medicare tax, also called the self-employment tax. So we're not saving any Social Security on the housing allowance. We're just saving income tax on the housing allowance. All right, let's advance. Slide 10, tax savings for the housing allowance. Okay, the housing allowance, as we just mentioned, is subject to the self-employment tax, aka Social Security and Medicare, but it is not subject to income tax. That's a good deal. Here's a compliance requirement that gets missed too often, and that is the housing allowance must be approved before it is paid. So here we are, early January. If you have not had your 2020 housing allowance approved yet, you should get it approved ASAP, because you cannot get your housing allowance approved this coming June and have it apply to all of 2020. So the IRS in the past has been a stickler about this, and that the housing allowance must be approved before it is paid. And approved means it needs to be documented somewhere as well. So whether that's in an adopted church budget, or that's in the minutes of a finance committee meeting, or an elders meeting, or an employment contract. It doesn't specify the method or the form of the documentation, but if the minister gets audited and the IRS says, I see you've received a housing allowance, was it approved before it was paid? There needs to be some sort of documentation to back that up. Any amount of housing allowance not spent on qualified housing expenses must simply be claimed as additional income on the minister's tax return. So that's pretty straightforward. As an example, let's say a minister has $20,000 a year designated to housing allowance and only spends $19,000 on housing expenses. The minister is simply on his honor to claim that extra $1,000 of income on his personal tax return. All right, this is a very important slide. It's got 3 bullet points that talk about the limit on the amount of housing allowance. And I'm pretty sure most people are familiar with number 1 and number 2. My experience tells me that not nearly as many people are familiar with number 3. So I'm going to do my best job to explain this to you. And I think I can even give you a little background about why Congress implemented this number 3 within the last decade or so. So if you go back 20 years ago, number 3 did not exist. It was only number 1 and number 2. So I think Congress had some motivation here for implementing this limit number 3. But let's talk about the limits. The amount the minister can exclude from income is limited to the lesser of, number 1, the amount properly designated. So if you designate $20,000 and you spend $22,000, you don't get to exclude 22. You would only get to exclude 20. So it's the lesser of the amount properly designated or the amount you actually spend. So if you designate 20 and only spend 19, you can only exclude 19. You're going to have to claim the extra 1,000 as income. So I think these first 2 pretty straightforward, been around a long time. But here's the catch. There's another limiter, and that is the lesser of the fair rental value of the furnished housing, all bills paid. So that's a little more interesting. And I'll give you the background. Here's what I think happened. I've heard this story. I'm not going to mention names. If I did, you would recognize the name. As a very famous pastor and author and all of these things. But this is a third-hand story, so I don't know if it's true. But I think it is going to illustrate what Congress was thinking when they implemented this part of the law. Let's say there was a minister who made $300,000, rather large church, and ordinarily the minister would designate $50,000 a year of the $300,000 as housing allowance. The minister probably has a big house if he's making $300,000 a year, and so maybe spending $50,000 a year on his housing, and rocked along, that wasn't a problem. But evidently, there was a year where the minister said, we're going to add a lot to our house. We're going to add a pool, maybe a gazebo. We're going to spend $300,000 improving our house. So the minister designated all $300,000 as housing allowance that year and spent all $300,000, making improvements on the house. The minister gets audited. The IRS says, you can't do that. That's crazy. That's ridiculous. That's, it's out of bounds. The Congress never intended for you to be able to get away with something like that. And the minister said, show me in the tax code where it says I cannot do that. And it didn't. The tax code was silent. It said, amount designated, amount spent, and there you go. So the minister won. Well, the IRS goes to Congress and says, that's not what you guys intended. You need to fix the law. And so they did. They fixed the law and said, no. We're going to put a third limiter on there, that the amount that you can exclude for your income is also limited to the fair rental value of the house, including furnishing and all bills paid. So going back to that little story, which may or may not be true, let's say the fair rental value of that house is apparently a really nice house. So maybe the fair rental value of the house was $7,000 a month. 7,000 times 12 is 84,000. In that scenario, the minister would have only been able to exclude 84,000 under the fair rental value test for his housing, and would have had to claim the other 216,000 as ordinary income. So that's a big deal. Not many ministers are familiar with that third limiter. Let's look at some illustrations. I think this will help even more. Number 1, this illustration, scenario number 1 is a low designation. So the minister designated $24,000 for housing, but spent $25,000. Oh, that's a shame. They designated too low. Their fair rental value of their house was $30,000. How much can they exclude from income? And the answer is $24,000, because it's the lesser of these 3 figures, the smallest one being the amount designated. So the amount they have to include in income off of that $24,000 of housing is zero, because they spent all 24 and then some, but they don't get to exclude 25. It's the lesser of these three. Now let's do scenario number 2, low cost. So in this scenario, the minister designated 24,000, but only spent 20, and the fair rental value of the house is still 30,000. So how much can they exclude from income? And the answer is 20,000, the lesser of the three. So they designated 24, only spent 20. They can only exclude the 20. So they're going to have to voluntarily and on their honor claim that 4,000 of income on their personal tax return as ordinary income, because they received 4,000 of housing allowance that they did not spend. Now we'll do scenario number 3, low rental value. So you had a minister that designated 50,000 as housing allowance because they were going to do some big improvements to the house. And as it is with all my construction projects, they always run over budget. So they actually spent 60 during the year. But if the fair rental value of the house was only 30,000, they can still only exclude 30,000 from their income. So they received 50 of housing allowance from their church, but because the fair rental value is the limiter here, they can only exclude 30. So they're going to have to claim the extra 20 as income on their personal tax return. A couple of tax tips down here at the bottom. Number 1, estimate or designate a housing allowance equal to the fair rental value, because you have nothing to lose. Nothing to lose. So go to illustration or scenario number 1. Had this minister designated 30, which is my recommendation, always designate whatever the fair rental value is. Had they designated 30 and spent 25, they would have gotten to exclude, if they had designated 30 and fair rental value is 30 and spent 25, they would have gotten to exclude 25 instead of the 24 because they did too low of a designation. But the second bullet point says that designating in excess of fair rental value is futile, because over here you notice that he designated 50,000. The fair rental value was only 30,000. So you can never exclude more than the fair rental value, so that makes it futile. So I'm saying always designate equal to the fair rental value, but it's futile to designate more than the fair rental value. All right, next, tax tip. Pay off your mortgage after you've paid all other debts. Okay, so why would I recommend that you pay off your mortgage after you pay off all other debts? Now, I want you to pay off your mortgage. I want you to pay off all your debts. Being debt-free, I think, is good for the soul. But if you're like me and you're having to pay your debts down over time, pay off all of your other debts before your mortgage. And here's why. Your mortgage payment is a qualified housing expense. Your car payment, your student loan payments, those are not qualified housing expenses. So when you pay off those other debts and free up that money, you haven't changed your tax situation any. When you pay off your mortgage, you have changed your tax situation. Once your mortgage payment goes away, the amount you're spending on housing is going to go down. Therefore, you are going to have less that you are spending on housing, less that you can designate, less that you can exclude. So I think this is a great tax tip. If you're trying to decide which debts to pay off first, I would pay off the mortgage last from a tax perspective. And then many times your mortgage rate may be lower than your other debts rates anyway. So that may just be good financial planning advice anyway. Eligible housing expenses, pretty straightforward here. Just a simple list, things you've probably seen before. And I'll say this, if you spend the money on housing to maintain your house, it's an eligible housing expense. Mortgage payments, utilities, insurance. Down at the bottom, I threw HOA dues, decorations, and even furniture. So, if you designate 30,000 for the year and your fair rental value is 30,000 for the year, and you get to December and you've only spent 25, you can ask yourself the question, do we want to spend an extra 5 on furnishings? Because that way you could spend the rest of your money, spend the rest of your housing allowance and still stay under the other limits. This fair rental value limitation, this is important. As we talked about, it's limiter number 3. It's a big deal. How in the world are you going to determine your fair rental value? Well, number 1, you could look at comparable rent houses in your neighborhood. So hopefully there's other houses in your neighborhood about the same size as your house. Hopefully they're being rented out, and you can determine the fair rental value there. Or you can ask a real estate professional that's familiar with your neighborhood or your area. Now, the third bullet point is important. So once you get the base rental price of your house, so let's say you've asked the real estate professional and they say, oh yes, houses of your size are going for $1,800 a month in your area. You say, okay, well, that's my base, but you get to add in bills and furnishings. Now, how do you figure out the value of your furnishings per month? I don't know, but you're going to have to use some reasonable estimate. You know, you could look at the furniture store that rents out furniture. You've got to come up with some reasonable estimate for the monthly value of your furnishings, and then you probably know what your bills are. So if your base house value is $1,800 a month and your bills are $300 a month, that'll put you at $2,100. Throw another $200, $250 in for the value of the furnishings. Maybe that's putting you at $2,300, $2,400 a month as your fair rental value limitation. Church-provided parsonage. Some ministers live in church-provided parsonages. That value of that house is not included in income tax, but the value is still subject to self-employment tax. Here's a tax tip. If you are a minister who lives in a church-provided parsonage, you can still receive a housing allowance to cover housing expenses paid from your own funds. So if you live in the church parsonage, but you still have to pay utilities or buy your own cleaning supplies or buy your own furnishings, you could still receive a housing allowance to pay for those items. Now, again, you have to worry about the fair rental value limitation, and that's harder to apply in a parsonage, but it's pretty easy. If the minister is paying $200 a month for utilities, the minister should be getting at least a $200 per month housing allowance, even if they're living in the church-provided parsonage. All right, so now I'm going to turn the microphone over to my business partner, Kevin. He's going to talk about tax-free reimbursements.
Good morning again. This is Kevin. Hope you're enjoying our seminar today. Okay, let's dive right in. Tax-free reimbursements. Tax-free reimbursements have become significantly more important with the tax bill that was passed in December of 2017, because one of the things that tax bill did is it eliminated itemized miscellaneous deductions. So if in the past you were claiming your business miles as part of your compensation and then writing them off, you can't do that anymore. And you can't do that with any of these items if you're a W-2. So it's more important now than it used to be. So let's dive right in. Tax-free reimbursements. All employees can and should be reimbursed tax-free for ordinary and necessary business expenses. Now, these two words probably should be capitalized and bold and underlined, maybe even all caps, ordinary and necessary. To be a tax-free reimbursement, an expense must meet that standard. It must both be an ordinary expense in that line of business, in the church in most of our cases, and it must also be necessary. So some examples: business travel. You could be traveling to a conference, office supplies, research materials, business meals, business use of a cell phone, or business use of home internet. You may have a home office, and you may be there working. That may be where your pastor writes sermons, maybe at home, and he needs internet access. So a portion of home internet. So these are just some examples of items that are or can be tax-free reimbursements. But how do you do that? You have to have what's called an accountable plan. Well, don't let that intimidate you in any way. That simply means that you have to have a plan in place that meets the IRS's requirements. And that plan just has to say that we expect you to turn in reimbursements, and those reimbursements need to be in good order. They need to be clear what they're for. They need to be for ordinary and necessary business expenses, and then we'll reimburse you. And that does not go on a W-2. It is completely tax-free. So let's just read through this slide. Compliance requirement: to be tax-free, reimbursements must be paid under an accountable plan, as I've mentioned. An accountable plan is where the employee submits documentation, receipts or logs, within 60 days and is then reimbursed. And it's important that this not drag out. The IRS has limitations. I'm not even going to tell you what those are in days. The recommendation is that you should do this monthly, and you may even want to think about doing it in conjunction with your normal pay cycle. If you pay semi-monthly, twice a month, then maybe you should turn in your expenses on that same cycle. Best practice: employees should request reimbursement for their business expenses via an expense report with receipts attached. So that is the basic rundown on an accountable plan and tax-free reimbursements. And remember, as long as you follow those rules, and as long as the expenses are both necessary and they're ordinary in your line of work, then they're tax-free. Let's talk specifically about car allowance versus a mileage reimbursement. A car allowance is a fixed amount paid to an employee each month. Now, because this fixed amount is not being paid under an accountable plan, it is simply additional taxable income to the employee and does not provide any tax benefits. So if your pastor gets a car allowance, it may be $200, it may be $500 per month, just depending on the size of church and how much he drives. That amount gets added in to box 1, and he pays both federal income tax and Social Security and Medicare tax on it. That's a car allowance. Now, if we do mileage reimbursement, that is a reimbursement to an employee based upon the federal standard mileage rate and is also substantiated by a mileage log that's been submitted by the employee. And notice that is 100% tax-free. That does not go to the employee on a paycheck. It's not going to go in box 1. It is a reimbursement as long as, again, ordinary and necessary, and we follow the accountable plan. Now, you know, we've put here the 2019 mileage rate was 58 cents per mile. 2020, it was lowered just slightly to 57.5 cents. And the IRS changes that every year. This is the maximum that the IRS will allow you to reimburse an employee. You don't have to use that number. If you want to make it simpler, you could use 50 cents per mile. You can use whatever you want. You just cannot exceed, in 2020, 57.5 cents per mile. And notice at the bottom, just for your information, commuting is not a deductible business travel expense. So when you get up in the morning and you drive from home to the church, that commute is not a deductible expense. That's not business mileage. Now, I know some pastors that believe that they work 24/7, they're never off, and in a certain sense, that's true because the phone can ring in the middle of the night and you're on if something needs you, someone needs you. And I'm not insensitive to that. But the IRS doesn't consider a pastor as being at work 24/7. So it's only for church to the hospital trips, church to the airport, church to places trips. It's not for church from home to church. So hopefully that helps you. And if your pastor's been getting a car allowance, you can switch this around and do a mileage reimbursement, and he'll pay less in income tax. Okay, let's talk about educational expenses just briefly. This is the last topic before the break. Checking my time. We seem to be doing pretty well on time. Okay, there's basically 2 ways that we can do educational expenses, that we can pay for employees' educational expenses and not have the employee incur income tax. The first is with an educational assistance benefit plan. Now, this must be a written plan, and in this plan, if we just follow the rules in our written plan, we're going to reimburse tax-free up to $5,250 per year of qualified educational expenses, tuition, books, fees, the same types of expenses that are includable for education credits. The IRS is pretty consistent in that. Now notice, so those don't seem too restrictive. We have to have a written plan. We can reimburse up to $5,250 per year. Well, the third one is a little bit restrictive. We cannot discriminate between full-time employees. If it is offered to one full-time employee, it must be offered to all full-time employees. So we can't just reimburse the pastor and not reimburse the secretary or the youth pastor. If they're all full-time employees, they're all in the same category, they're not part-time, they're full-time, they must be treated the same. But notice here's another good thing. This can include graduate level courses. It's not just for undergraduate. And lastly here, it does not include spouses or dependents. This is just for the employee. And one other thing to note, or I think I already mentioned it, it does include graduate level courses. So that's educational assistance benefit plans. And with these, the course of study can be anything. It doesn't need to be related to the church or church work. It can be anything, any type of education, which is a key difference. Let's talk about the second type, educational reimbursement plans. Now, these are a little bit more simple in a way, but they're also more restrictive. educational reimbursement plan is where we reimburse educational expenses tax-free that's a big if the education is required by the church to keep the employee's status or job and serves a business purpose of the church, or it maintains or improves skills required in the minister's current position, and it does not qualify the employee for a new trade or business. So I'm going to come back to these in just a second, the requirements. But notice here, we can discriminate. It can be discriminatory in that we can choose to pay for the pastor to get additional education and not pay for anyone else. And that does not render it taxable, just that one change. So that's a key point. And you need to remember, as you're deciding which one you want to use, you need to look at your situation and figure out which one would work better for you. So a couple of examples here. Let's just say that your pastor is enrolled in a local Bible school or seminary, and he's taking Hebrew classes or Greek classes or additional Bible classes. Well, those are, in all probability, those are helping him do a better job at his current job. And the church may even require him to stay up to date. So that, in all probability, is a tax-free situation. Well, let's say that your pastor is doing a lot of counseling and he starts getting more counseling education, and then he starts to pursue a degree in counseling. Even if the church wants him to do that, that is probably going to disqualify him because it would qualify him for a new trade or business. He would be able to hang out a shingle and be a counselor if he got that degree and got licensed. And that is a different trade or business than being a pastor. All right, so we have gotten through session number 1. And right now I've got 9:42, so we have about 8 minutes that we'd like to do some Q&A. And then beyond that, we will take a brief break and come back at 10. And I haven't been watching the questions, so Jerry's coming back right here. I think he is.
Yeah, Kevin, I want to answer one of the questions that I saw came in through the Facebook, and that was about how can a minister pay their Social Security and Medicare tax since they're not claiming, how can they pay their Social Security and Medicare tax on their housing allowance since they're not having to claim their housing on their tax return? That's a great question. So there's a Schedule SE, that's the Schedule Self-Employment Tax that you attach to your personal Form 1040, and that's where you claim all of your income that is subject to Social Security and Medicare. So if a minister gets $30,000 a year of salary, $20,000 a year of housing, remember salary and housing are both subject to Social Security, that minister's Schedule SC will show $50,000, and then you'll basically pay the 15% Social Security Medicare tax on the $50,000. So it's attached to their personal Form 1040. It is a Schedule SE. All right. So while Kevin is accumulating any additional questions coming in through the Q&A, I'll just talk for a minute here about this chart that you have on your screen. This talks about our pricing and features for our FlockBase software. Many of you are aware that we've had the desktop version for over 10 years, closer to 12 years on the desktop version. The cloud has been out for a year. So not everybody's familiar with that. And we do have a special offer for you today. So you've given up your Saturday. That means you are serious about doing church work and serving the Lord. And we want to kind of match that for you. So we're giving a special offer today. That's the discount code half off 2020. We're going to post that into the Facebook Live comments. And if you'll use that coupon code anytime during the month of January and enter it in as you place your order for the cloud. Now, this really only applies to the cloud, but if you'll enter that coupon code as you place your order for the cloud, you will get half off the price for the whole year of 2020. So if you sign up for the cloud today, instead of paying $16 a month for 2020, you will only pay $8 a month. You sign up for Plus, you'll pay half of $29, $14.50, and half of $59 if you sign up for Pro. You sign up anytime during the month of January for cloud. If you're already a cloud user, and we appreciate that, and we hope you're enjoying it, there are several advantages to the cloud. Of course, one is that the cloud can be accessed from anywhere. So anywhere you have internet connection, you can jump on and do your work. Your minister can be at home looking at the contact information or doing group emails, group texts, whereas the church financial secretary could be at his or her home doing the accounting. So this accessibility from anywhere, we believe, is a huge advantage of the cloud. And then we also have a lot of extended features on the cloud. For example, on the cloud, we have a mobile app, and we do not have that for desktop. On the cloud, you can do child check-in, group texting, group emails, online giving. That's a big deal. There's a calendaring system. Of course, you can do mailing labels. I mean, we're turnkey, full-fledged church management system. So I just wanted to remind you of that offer for during the month of January. If you enter half off 2020, you'll get half off of your cloud pricing for the entire year. If you're an existing cloud user, we want to honor you as well. If you will just send us an email to info@flockbase.com, we will honor that half off for you for the rest of the year too. So just info@flockbase.com, just give us your church name, and we will adjust your account there as well. All right, so we have another question. If we only have a part-time minister, can the pastor be paid a housing allowance and no paycheck? Outstanding question. I appreciate you asking that, and the answer is absolutely yes. So if you're a small church, and let's say you've got a part-time pastor, and maybe the pastor gets paid $12,000 a year, and I completely understand that. I go to a very small church myself, so I understand. We've got lots of small churches in America. Yes, if the minister says, I'm spending more than $12,000 a year on my housing, I want to designate my entire salary as housing allowance, he can absolutely do that. That's been tried and true for decades, so that is perfectly fine. And that way, the only thing the minister is going to be paying is the Social Security and Medicare tax on the housing allowance, and will not have to claim that for income in any form or fashion. So that would be great. All right. I don't think we have any other questions right now. So I think that means we will take a little break, and let's return at the top of the hour. You can keep posting your questions. I'm going to grab a bottle of water, but we'll look at the Facebook Live questions. You can keep posting them, and then we'll be back at the top of the hour. Thank you.